guys, it's your girl Carrie, and it has been a while since I've been on camera. The last couple of weeks have been really hectic. I'm sure that you guys have been trying to get acclimated to our new norm. Several weeks back, you guys know that my toilet overflowed and caused some severe damage to my home. So I'm also in the process of getting my home renovated, the areas that was affected by the overflow. And originally I said I was going to take you guys along the process and share, the renovation. But during this time, I did not feel that it was appropriate to share, how am I picking out tile and, shopping and things like that, while the world is just really trying to, keep their head above water, people losing their jobs. I hear it's like 3.3 million people at the time of this recording that have filed for unemployment. So today I wanted to share my understanding and kind of give you some guidance and tips on the new Aid, Relief, and Economic Security Act, which is referred to as the CARES Act, so that you can take this as a starting point to start to get your financial situation together. And as a disclaimer, this video is just a video for reference. Everyone has a unique situation, so I advise you to speak with your accountant, your CPA, or your financial advisor to get information that's tailored specifically for you. So the broad categories that I'll be covering in this video would be income, healthcare, student loans, mortgage and rents, retirement, and credit. At the end, I'm going to conclude with some steps that you should be taking in order to pull all of this information together and make a comprehensive financial plan for your family. So let's talk about income, and specifically we'll first talk about the stimulus checks because that's what everyone is familiar with. Now, who is eligible and how much will your stimulus check be? Now, in order to be eligible to receive a stimulus check, you have to be a U.S. resident and have an adjusted gross income less than the phase-out amount based on your tax filing status. So let's look at this little chart that I put together, and you'll see in the left-hand column the filing status, and going across you'll see your adjusted gross income and the stimulus check amount, and then the maximum phase out amount, and then you'll see the 5/100. And basically what that means is anything above the adjusted gross income amount, your stimulus check will be reduced by $5 for every $100 you earn over the AGI amount until you hit that $99,000 threshold. So for example, a single person that has an adjusted gross income of $75,000 or less will receive the full $1,200 stimulus check. Now, in the column where it says phase out amount, for every $100 that you're over the $75,000 amount, if you're a single taxpayer, you will reduce your stimulus check by $5. So until you will reduce your stimulus check by $5 until you reach the $99,000 threshold. And you can see all of the other categories for married filing jointly and your head of household. Now, you also receive an additional $500 for each dependent child that is under the age 17. If your child is over the age of 17, you will not receive any money for that child. Now, another thing I want to clear up is that the amounts are not based on total income, but it's based on your adjusted gross income. Now, if you made a total income of $100,000, that doesn't necessarily mean your adjusted gross income is $100,000. So I'm going to share an example of a person that's making the same total income, but they have different AGIs, and you can see how their stimulus check will play out. Now let's look at how adjusted gross income works as it relates to receiving your stimulus check. Now we have three Sallys here. We have Smart Sally, Regular Sally, and Silly Sally. And all three of these Sallys make the exact same income. They all make $100,000 per year. Now if we move down to the next line where it says adjustments to income, Smart Sally has a $25,000 adjustment to income. Now when filling out your taxes, you're allowed certain adjustments to arrive at adjusted gross income, and some of the main components in there could be your retirement accounts. Like your retirement accounts can be pre-tax, so if you put in the maximum amount for your 401k or IRAs or your SEP IRAs if you're self-employed, also your health savings account and things like that. So Smart Sally maxed out everything that she could pre-tax, and so she was able to deduct $25,000, and so she arrived at an AGI of $75,000. So although Sally made $100,000 total income because of her adjustments that brought her down to $75,000, she is able to collect the entire value of the stimulus check, which is $1,200. Now let's move over to the next column where we have Regular Sally. She, just maybe put in not the max. She didn't max out her 401k, but she did put something in there. And so she was able to deduct $10,000, which had her arrive at $90,000 of AGI. Well, her AGI is above that $75,000 limit where you can get the full amount. So now her stimulus check is going to be reduced by $5 for every $100 that she's over the $75,000 limit. Now we move over to Silly Sally. Silly Sally did not put anything away for retirement. She didn't put anything in her HSAs. So therefore she has zero adjustments to her income. So she has a full AGI of $100,000. And in this case, Silly Sally will not get any stimulus check because she's above the phase out threshold. And that's how it works. So it seems like those that actually put away for retirement made out the best. So now they have extra money in retirement, and not only that, they actually get a stimulus check. Now some people have asked, well, what if I have a college student and my college student worked, they had a job, they earned income, will they qualify for the $1,200 stimulus check? And the answer is, it depends. If you still claim your college student on your taxes, then no, they cannot receive a $1,200 stimulus check, even though they've worked and maybe filed a tax return. Now, if your college student files their own tax return and they are not claimed as a dependent on anyone else's tax return, then yes, they will be eligible to receive the $1,200 stimulus check. Also, if you're retired, you will still receive a stimulus check if you fall within the income range. So those that are receiving Social Security benefits, they also will get a stimulus check. Now, is there anything that you need to do to receive this stimulus check? No, the government will handle sending out all those checks. Basically, what they're going to do, if you've already filed your 2019 taxes, then they're going to use that information to send out your checks. Now, how you receive your checks is going to be dependent on how you filed your tax returns. So if you filed your tax returns for direct deposit, they're going to send that money direct deposit to whatever bank account you had on your tax return. If for any reason that bank account is no longer active, and it will come back as declined, and then they will mail you out a paper check to the most recent address on your return. If you haven't filed your 2019 taxes, they're going to use your 2018 taxes to determine whether or not you qualify for the stimulus check. And if you've moved since 2018, the address that's reflected on your income tax return, then I encourage you or urge you to go ahead and make sure that you file your 2019 return so that they can mail that check to the appropriate current address if you're not going to use a direct deposit option. Now, there are some folks out there that may say, you know what, they're using 2018 and 2019 incomes, and I don't qualify because my income was too high in those years. But I do know since 2020 has started, I've taken a beating because I've gotten laid off or I was self-employed. I don't have the income that I used to have, and so I know I will meet that income threshold for 2020. Well, all is not lost, because essentially what this stimulus check is, it's an advance on your 2020 tax credit. So for those of you that do not qualify now because your 2018 and 2019 income was too high, when you file your 2020 tax return, you will be eligible to collect your credit or stimulus check at that time. Now, I know that may not sound great right now, especially when you need the funds now to help, pay for your bills, but it's just good to let you know that it all is not lost. You will still receive that credit. Now, there is a sweet spot for some of you who may be using your 2018 income because you haven't filed your 2019 taxes and you qualify under that amount. And then when you file your current taxes, 2019 or 2020, you've made more than the threshold amount. As of yet, there hasn't been any guidance. There may be some new rules coming out, but as it stands right now, you're not going to be penalized for being overpaid or given that stimulus check, even though you surpass the income amount. The stimulus checks are supposed to be starting to come out in April, but again, if you have some sort of hiccups with your return, for example, you change addresses, your bank account information is incorrect, you might have a delay. And also, if you're getting a paper check versus a direct deposit, there also may be a delay. So they say anywhere from 3 weeks and beyond. So expect to see your check within about 3 weeks or so. Now, moving right along to unemployment income. So for those of you that did not qualify for a stimulus check, but you've lost your job or you've lost significant hours from work due to, there is some relief for you. Not only will your state provide state unemployment benefits, but the federal government has stepped in and they're providing an additional $600 per week for any unemployed persons. The first step in qualifying for your unemployment insurance benefits is being unemployed. Now, they've waived several categories or qualifications that you would normally need. For example, in the past, you would have to have worked so many hours and made a certain level of income over a base year. They're not including that. If you had a job and you were laid off reasons, or if you were slated to start a job but you couldn't start because of reasons, you are eligible. There are no income requirements. There is no time requirement. So if you have lost your job or couldn't start your job, I would encourage you to go ahead and apply for your benefits. So in addition to your state's unemployment benefits, because that's the first stop, you guys need to get familiar with your Department of Labor's, your state's Department of Labor's website, where they will have all of the unemployment information for you to file online. That's the first step. You have to get approved by your state. You have to be collecting state unemployment benefits in order to get the additional $600 a week that the federal government is also offering. What's also great about this is the federal government, for the first time, have included self-employed workers in being able to qualify to get unemployment insurance. Now, the rules for applying for benefits under the self-employed, if you're a self-employed person or business owner or a freelancer or Uber driver, Lyft driver, a gig worker, That's again in the works. Guidance for that is still coming out, and again, it's probably going to be issued at a state level. And in order to calculate your weekly benefits for a self-employed person, I believe they're going to be using the disaster unemployment assistance formula. And the reason being is there is a difference between being an employee that's laid off versus a self-employed person or a business owner. If you're self-employed and you see a huge drop in income from, you're still trying to work, you're still trying to build your business, you're still trying to get income. So they are going to be calculating your income based on what you've earned that particular week and kind of matching it up to smooth it out along the way, because you are still probably currently working. Another great benefit from this that's been put in place, if you lost your job due to reason, for example, your job was just closed down, your employer just closed down and now you're home, you do not have to meet the requirement of actively seeking work until further notice, because again, you can't actively seek work because that field of work is closed or has been shut down. Also, you can receive unemployment insurance if you are home and you're the primary caretaker for your children. I know there have been multiple states that have closed down schools for the remaining school year, and now parents have nowhere to send their kids. Some daycare providers have been closed as well. So if you have to stay home to care for your kids, you are also eligible to file for unemployment insurance, and you will be able to get the additional, you'll be eligible to apply for the additional $600 a week as well. Now this can actually pan out to be great for those low-income for those low-income earners. Anyone that's earning $15 or less and gets laid off due to or you have to stay home and care for your kids, you will actually be making more than you did when you were actually going to work. For example, if you were working a job where you made $15 an hour, and you worked a 40-hour work week, that would be $600 in earnings for the week. So when you apply for your unemployment benefits, you're still going to get that federal level of $600 plus whatever your state unemployment benefit is. Now the state unemployment benefit, that varies widely through states. Each state determines how much they're going to give. Each state determines their maximum threshold on unemployment benefits, both for dollar amounts and the length of time. I'm going to leave a link in the description box below that lists state by state and the maximum benefit that you can get. Now let's look at a comprehensive example of a family of four where both parents lost their jobs, so they both will be collecting unemployment, and they also qualify for the stimulus check. And we want to see how the incomes would play out if they lived in different states throughout the nation. So we're going to compare one of the highest states to one of the states that have a lower unemployment payout. We're going to be comparing Washington and Alabama. So if we look on the left-hand side, we see the weekly state benefit. In Washington, I believe it might be the highest and most generous unemployment payout benefit for any state, and that is at $790 per week. And compare that to Alabama, where you get a maximum payout of $275 per week. Now each state will get, in each state they will still get the $600 a week benefit from the federal portion of the unemployment benefit. So you will get a total weekly benefit in Washington of $1,390, and in Alabama that would be $875 per week. So your maximum monthly benefit for one person in Washington would be $5,560 per month, and in Alabama it would be $3,500 per month. Now add on to that your stimulus package, and you would get $1,200 per adult, and then since they have 2 kids, you would also get an additional $500 per kid. So for 1 month, this family could potentially get $14,250 when you combine the unemployment benefits for both parents stimulus checks, and the 2 kids stimulus check portion, and then you compare that to what you would get in Alabama, which is $10,400. Now that's a pretty penny. That's nothing to sneeze at. So I think that's a really good chunk of money that would help you through this this crisis. There's also some relief for those that have severely reduced hours at work. You can go ahead and apply. So since there are so many different levels and so many different situations, I would encourage you to go ahead and get the ball rolling and apply for your unemployment insurance, whether you think you may be eligible or not, because they are updating the rules every single day and you want to make sure that you're already in the system. Now the length of time that you can receive these benefits, it varies by state. Some states, most states I would say, have a 26-week period where you can actually collect your benefits, and then on top of that the federal government added an additional 13 weeks of relief. So for most Americans, they can receive up to 39 weeks of unemployment insurance. Now another issue that our self-employed persons will probably run into when filing for their unemployment claims is if they have multiple sources for their self-employment income and trying to file for unemployment when one of those revenue streams dips. And then also, does that revenue stream actually qualify for related reason? So for that reason, those cases will be looked at on a case-by-case basis, but it shouldn't deter you from at least filing. The worst case scenario is that they can say no. Now another source of income that you may be able to tap into during this time is health savings accounts and your flexible spending accounts, your health flexible spending accounts. They are now allowing, they put into this bill, which I am super excited about because this directly affects me as a woman and also my small business. They've finally allowed women to deduct menstrual products using their FSAs and their HSAs savings accounts. So if you're buying pads, if you're buying tampons, if you're buying menstrual cups, if you're buying period panties, woohoo for Tommies, and many of you know I am in the period panty business. I created a brand called Tommy's, which stands for Time of the Month Panties. It is a leak-proof period panty with a pocket on the front for a disposable heating pad to help soothe cramps. Those would be eligible for pre-tax dollars. So you can use your HSAs and FSAs either by your debit card, swipe it, or you can submit that in for reimbursement. So that's a great way because those are products that women need to use all the time. So I'm happy about that. Let's talk about healthcare. Now I'm only going to specifically be talking about those that have actually lost their jobs, not those where the employers had to shut down their jobs, but they're still paying their employees and providing health care coverage. These are people that have been separated from their employers. What do you do for health care? Well, the new bill did not put any provisions or subsidies in there for those folks that are going to receive COBRA. Now, when you're laid off from your job, you have the right to continue the same coverage that your employer provided you, but instead you pay the entire premium for that coverage, and then that coverage lasts for a specified amount of time. Most people are not able to pay those COBRA coverage premiums, but this bill does not give you any subsidies towards that. So what do you do when you're faced with that situation? Well, in this case, if you do have funds in your HSA, your health savings accounts, or your FSAs, and you want to continue the same coverage that you had with your employer, you can use those funds out of those accounts. But again, you might have to look at what type of account you have. Do you have an FSA or an HSA? I won't get into all of the details because this video will be very long, but if you want to understand more about health spending accounts, leave a comment below. Now that you're unemployed, you can possibly check to see if you are eligible to receive health insurance through Medicaid. Now, Medicaid is typically for those that are low income, so your income may not be low enough to qualify. It's also for pregnant women and children. So if you are in that bucket where it's the income, you're pregnant or you have children, you might qualify. So I'm going to leave a link in the description box below for a Medicaid checklist. And they also have some asset requirements for Medicaid. Typically, you can't have more than a couple of thousand, a few thousand countable assets in order to qualify. So many of you may not be eligible for the Medicaid. The next option for may not be eligible for the Medicaid, but you might be eligible for state health plans that are for low-income families for your children. So at least you can get your children health care. And the next option you have is picking up an individual health insurance on the open marketplace under the Affordable Care Act. Under the Affordable Care Act, and because you lost your job, this would be a qualifying event, so you don't have to wait for an open enrollment period, and you can purchase your insurance that way. Now, the next category is student loans. Now, the government has put a 6-month no interest, no payment in effect. So basically, starting now on through September 30th, you do not have to make any payments on your student loans, and your no interest will accrue and it will not affect your credit score. And for those of you who are part of the Public Service Loan Forgiveness Program, where you make the 120 payments on time over a 10-year period, and then whatever's remaining is wiped away, this will not affect your eligibility for that. In fact, though, for those 6 months, even though you're not making a payment, you will get a credit for that month. So for those 6 months, you're essentially getting your loan paid off for free if you're under the Public Service Loan Forgiveness. So if you were required to pay, let's say, $250 a month, you will not have to pay that $250 a month each month for the next 6 months. Not only that, you will also still get your credit, so it will be credited to you as if you paid for those months. Now, if you're not part of any loan forgiveness program, although you're not required to make those monthly payments for 6 months, that amount still is included in the loans that you owe. Another thing that I want to say about the student loans as well is that you want to make sure that you check, because a lot of times these service providers make errors. They don't update things. So I would grab my student loan, the latest student loan statement, look at what the balance is now, and then check it again in September to make sure that it hasn't changed, that they're not accruing any interest. And then also make sure, if you're part of the Public Service Loan Forgiveness Program, that you are actually getting your credits each month for that 6-month period. In the next couple of weeks, you should be receiving a letter from your lender stating that your federal student loans have been put on pause, and there is no interest and no payments due for this time. And then in August, you should start receiving another letter letting you know that that period is going to end at the end of September, and that you will need to start paying your student loans again. Now, this particular provision only relates to federal student loans. This does not cover anything for private student loans. So if you've taken out private loans and you need help, you will have to call that lender directly and make some sort of arrangement. This is only for federal student loans. Let's talk about mortgage relief and renters relief. That's another huge, line item on our budgets. How am I going to pay the mortgage? How am I going to pay the rent when I just got laid off? Well, there are a couple of options that are out there. Now, this bill covers federal mortgages only. So if you have a loan that is held with some other lender, so the mortgage relief, what do we get under that? If you think that you're going to come or face hardship with your mortgage and you have a federally backed mortgage, what they're offering is a deferral plan. Now, let's take a step back so that you guys know exactly what you're getting into when you're trying to get relief for your mortgage. You want to make sure that you read the fine print and understand what's going to happen. Now, sometimes people apply when they have hardship for forbearance on their mortgage, and typically what happens in a forbearance situation is that you make an agreement where you pay a smaller amount or you pay no amount on your mortgage for a specified period of time. So let's say you had a $2,000 a month mortgage and you had a forbearance period where they let you not pay for 3 months. At the end of that 3-month period, it's not tacked on to the end of your loan. You are required to pay the 3 months that you didn't pay plus whatever the current month is. So you essentially now owe a $8,000 mortgage payment at the end of your forbearance period. And you don't want that. If you're already in a situation where you can't pay it, you don't want to be hit with a large bill. So you want to make sure that they're actually tacking the loan balance at the end of the loan and extending the loan period as opposed to having to pay a lump sum payment. Now, you don't automatically, you can't call in day one, you lose your job, hey, I need to get a deferral payment. They want to see that you are behind on your mortgage. You have to be 30 to 60 days behind on your mortgage before you can even apply for a payment plan. And then when you actually apply, you have to have been out of your crisis mode. You have to be in a place where you can now pay your full mortgage amount, what your normal monthly mortgage amount would be, without any reduced amounts, without any reduced rates. So let's say, use our $2,000 a month mortgage example. You would have to be able to go back and pay that normal $2,000 a month. You can't say, hey, I can pay $1,500. No, you have to be back in your same situation before you asked for the deferment, because they want to make sure that you can actually pay. So once you show that you can pay your monthly payment on time each month, they will take the amount that was deferred and tack it onto the back end of the loan, and now your loan is just extended that much further for the life of the loan. It also becomes due if you decide to sell your home, then you have to pay off that entire amount. I heard that some of the large banks, I'm not going to name any names, people were calling in for these loan deferments and forbearances, and depending on the bank, they would issue these deferments, and then the people will have to pay the balloon payments at the end, and they had no idea. And so when the banks were asked about this, why didn't you explain these options to the consumers? And what they were told was, well, this particular bank, we service some of our own loans, and the ones that are serviced by us, we will allow them to tack the payment on the end. But we also are the service providers for other loans that are not offered by our bank, and those are the rules for those service providers. They give the forbearance, and then they have to pay in a lump sum. So depending on who has your loan, who's servicing your loan, it's going to determine how you actually pay it back. So the tip here is just to make sure you know the terms of your deferment, your forbearance, or what have you, so that you can prepare for that. So just ask the question, hey, does this allow me to tack this on to the end, or will I be required to pay everything up front? What are the terms? And not only after asking, ask them to give it to you in writing, to email you the contract so that you can actually look at it and you know what you're actually getting. Now for renter's relief. So let's say you can't pay your rent. Well, they do have provisions. That's only if the owner of the rental property has loans federally backed mortgages. And if they do, then there is a nationwide eviction moratorium for all federally backed loans on rental properties. So what that means is for the next 120 days, no landlord can evict a tenant, nor can they add on additional fees, give them adverse credit marks on their credit report because you did not pay your rent. So you have a 4-month period roughly where you don't have to worry about getting evicted if you are a renter. Now, what that does not mean, it doesn't mean that you don't owe the rent. So it doesn't mean, oh, for 4 months I can live rent free, I don't owe it, the government's paying my rent. No, it does not mean that. It means that the rent is not due. So what you need to do is work out a payment plan, work out an arrangement, work out an agreement with your landlord. Communication is key. If you think you're not going to be able to pay rent, but you know that, oh, I'm waiting for my stimulus check to come in, I'm waiting for my unemployment to kick in, and you just talk with your landlord like, hey, it looks like I'll be able to pay the rent on this date. Can I pay it then? So it doesn't excuse you, it doesn't relieve your debt that's owed to that landlord over those 4 months. It just gives you the opportunity of not becoming homeless. Again, this only works if it is a federally backed mortgage. Now, if this particular landlord does not have a mortgage on the home or the rental property or the apartment, they own it outright, then they can still potentially evict you. Now, what you have to look at, each state is state by state are implementing their own rules on eviction. So if your state has not implemented a rule about not being able to evict tenants during this crisis, then you can probably go ahead and evict them for non-payment. If your state has stepped in, then you would probably have to follow the state guidelines. Now, the flip side to that is that if you're not paying your rent, then your landlord is, put in a hard place. Because now if they have mortgages out on the properties that you're renting, they don't have the money to send to their lenders. If they have property managers managing their properties, they can't pay their workers. And so the trickle-down effect. So what relief has been put in for the landlords, if they have federal backed mortgages, if there's a mortgage on that home, they can apply for relief on those loans. So it's kind of a win-win situation for both. But it does not, it just covers the mortgage. Now, if you are a landlord or you're a real estate investor, you know that the mortgage is just one piece of the pie. You might be paying property managers. You're still responsible for maintaining that property while that tenant is there for those months. If something should go wrong with the property, you still are paying taxes, insurance, utilities. So the mortgage piece covers a good chunk of it, but you're still left, with exposure when your tenants don't pay the rent. So be mindful. Don't just, take into account, oh, they can't kick me out, I'm not going to pay, I'm going to hold on to this money and see what happens. You're putting them in a bind. So everyone needs to kind of try to work together if they can. Now let's talk about retirement accounts. Now the government has loosened the restrictions on your 401ks and your IRAs and the like. So you can take a distribution, which is penalty free. So, traditionally you'll have to pay a 10% penalty on an early withdrawal if you are not, a certain age. Eliminating the 10% penalty, and they are allowing you to withdraw up to $100,000 out of your retirement account penalty free. Now you have to make this withdrawal within 180 days after the bill passes. So what that means is around the September mark, you won't be able to make these withdrawals. Now, in order to take out the withdrawal, it has to be a reason. Either you contracted the disease, or either you lost your job, or face financial hardship or face financial hardship related to. And the government is asking the services of the 401k or the retirement account just to take the employee's word for it. So you really are not going to have huge documentation and trying to, prove that, this was the case. It's really lax. So pretty much almost anyone would be eligible to take that withdrawal. They're going on the honor system. Now, if you do take the withdrawal, there are a couple of options. So when you take the money out, it doesn't mean it's tax-free, it's penalty-free. There's two pieces to the retirement account. If you take the money out early, you're assessed a 10% penalty. And then also, if it's not a Roth IRA, if you're withdrawing the money from like a 401k, the funds that you receive are taxable. So in order to smooth out your tax situation, for example, if you took out $100,000 all in one lump and then you had to report it on your return, that would bolster you up into a higher tax bracket than you normally would be in. So what the bill allows for is for you to include the income over a 3-year period. So you would just divide $100,000 by 3 years, and that's how much you would include in your income over the next 3 years. Also, if you can pay back the $100,000 within a 3-year period, you won't be taxed on any of it. And the bill allows for you to make larger contributions for that very reason, because the contributions are normally limited. Now, here is a tip. I would strongly urge you to use taking money out of your retirement accounts as a last resort, because you probably noticed your retirement accounts have declined significantly in value due to the market. And you would just compound that further, or it would be a double whammy if you lost value in your retirement accounts and then you have to pull money out to use it for your living expenses. So think hard and think twice before pulling that money out. But if you really do need that money, make sure you take it out within that 180-day window frame, so that you won't be dinged even further by having to pay the 10% penalty. So how does this affect my credit? Well, there are credit provisions in the bill, and this should not adversely affect your credit as of January 31st, and then 120 days after the cessation of the natural disaster. So after we declare, the government declares that we're no longer in a natural disaster, 120 days from that point. So your credit should be good from January 31st all the way 120 days past the conclusion of our natural disaster. And all creditors should be marking your file as current. Now what you can do, and this will help those that may have, spotty credit already, order your credit report. If you have some dings on there as of February, because this starts on January 31st, you can get those dings removed, and then there shouldn't be anything else there that can adversely affect your credit due to non-payment. Now, I believe this only counts towards your credit, like loans and mortgages and things like that. Now, there are no provisions in this bill to help you with utilities. There's no provisions that will help you with internet. So if you're not paying your internet bill, if you're not paying your utilities bill, if you're not paying your cell phone bill, then the companies can discontinue the service. Now, you can call each one of these providers, or maybe there are some state requirements, or there's some state relief that they require utility companies to not cut off your utilities. But as far as a federal requirement, there are no requirements for that. And then I don't know, if someone else knows, leave in the comments below whether or not, if your utilities or your cell phone gets cut off or disconnected for non-payment, if they are able to report you to your credit bureaus. I'm not sure if they can report non-payment to the credit bureaus. because from my understanding as it's written now, it's for like credit card debt, student loans, mortgages, and things like that, not just individual bills. So be mindful of those, make sure you're staying on top of that and talking to those providers so that you won't be affected. I know this was a lot of information to process. Hopefully you've gathered something from that. And in closing, what I encourage you to do, whether you still have your job, whether you've lost your job already, is to kind of sit down, take a deep breath, and kind of come up with a plan. So what I would do now, even if I am currently employed, get my paperwork in order. And what do you mean by that, Carrie? The paperwork that you're probably going to need if you should have to file an unemployment claim, should you try to go and apply for Medicaid or different health coverage insurances and things like that. You want to gather all that paperwork. I'm going to leave a few links down below for some checklists, for different checklists that you might want to use so you can gather that paperwork together. Then also do your research. Now, each person's financial situation is different, so everything that I talked about may not come into play. You may not need to get health care right now because your spouse already has coverage. I think it's essential for you to make a emergency essentials budget, and basically what's included in that budget are all the things that you have to have and have to pay for in any given month. And then once you know everything that you need to pay for, you have an idea of your cash flow, how much money you need. After you get an understanding of what your monthly bills are, I will prioritize those bills. And what do I mean by prioritizing those bills? Those bills that have no relief, whether it's in this stimulus package or just in general. If they have no relief, no way that you can get around it, for example, a utility company can cut off your heat or gas, then you want to make sure that you pay that bill. That will be an essential bill that you will pay. Those bills that have wiggle room, like say your mortgage. Right now you can't really get foreclosed on, or if you're a renter you can't get evicted. That will become a lower bill on your totem pole because you know that nothing can happen to you in the short term. So you want to make sure you pay those bills that are essential. Now, if you have any bills that can be cut because they're non-essential, those are wants and not needs, cut that bill out altogether. Discontinue the service. Do what you need to do. Just only have essential bills on your list. And after I get all of my essential bills, you want to create a cash flow plan. Because the problem is, if you don't already have money set aside, maybe you only have $1,000 in your emergency fund, that's not going to probably be enough to cover your upcoming bills. So now you need to create a cash flow plan, because once you look at all of your bills that are due, you know that the money's coming in. Let's say you know that you're going to get unemployment insurance, you know that you're going to get the stimulus check, but that's going to be 3 weeks or more down the line, so you may not get this cash for another 6 weeks. But now that puts you into almost 2 mortgages. The one that's going to be due in a few days, April 1st, and then by the time you get the stimulus check, the second month is coming around. So what you want to do is understand when your cash is coming in and how you're going to pay it out. You can call each one of your creditors or utility company and say, hey, look, I don't have the cash right now, but I can pay on this date. So you just want to make sure you get your cash flow together. I don't want to make this video super long, but if you would like to see a video on how to create a budget, and not only a budget, but a cash flow plan, leave a comment below. Also, leave a comment below and let me know what else it is that you would like to know about as it relates to finances. And it doesn't necessarily have to be Related, because when I started my channel is called Very Carry, and my tagline is create, celebrate, decorate, and allocate, because those are the things that I love. So on my channel you will find me always creating something, celebrating something because I love doing parties, decorating something because I love home decor, and allocate means, you know, talking about money. I just noticed that most of my videos, my audience really shies away from the money aspect ones, but they love the decorating and hauls and things like that. But I think finances is a huge part of that. Being able to manage your finances will allow you to comfortably have the other things that you want in life. So guys, I hope that you gained something from this video. I hope that everyone is trying their best to stay safe. Enjoy this time with your family. Pray for those that are in need. I, really feel for our frontline people out there that are on the front line, the nurses, the doctors, the people even in the grocery store that are putting themselves at risk every day for us. I'm praying for our nation, and I am praying for the world. So until next time, I'm going to keep calm and carry on. Bye guys.